So we have covered SMSFs, commercial investing, and REITs over the last few weeks. Now, what are the issues and opportunities that investors might face in residential and commercial property? As always, Anthony Landahl from Equilibria Finance joins us now. Anthony, always good to have you with us.
Nice to be here.
Well, I'm going to start with this being the last week of the official reporting season. Talk to us about how REITs did.
Yeah, REITs fundamentally, the biggest challenge with the REITs was the revaluation of a lot of the commercial assets. I read some interesting data recently that for the first 6 months of 2023, particularly in that higher end institutional investment, a lot of which REITs are accessing, volumes are down about 50% on those opportunities in the commercial space above $200 million. Some of the opportunities in the commercial space are more through the private investors, but the REITs traditionally are quite a high performing asset class, outdoing bonds and other asset classes over time and equities. And it's a good way, it's a good access point for a lot of investors trying to diversify their portfolios. But they're in an adjustment phase. But if you take a short-term view, the market has slowed down. But again, it's probably a good saying for now. A lot of it is about time in the market rather than market timing. So a lot of those assets are just trying to hold their position while they're going through this period.
Yeah, and Anthony, I went through a whole lot of charts, which we had data from yesterday and today. What do you make of the declines in approvals? Because that would mean a smaller pool to choose from, and also an increase in auctions, which means more people want. So again, supply and demand. What do you make of that?
The market is stabilising a little bit. We've got a structural problem fundamentally in Australian property around supply and demand, but the market has fundamentally remained resilient through this time. It started to increase again around February after coming off about 9% last year. The biggest challenge we've seen for investors, and as your data pointed out, investor approvals and credit flows are down. The biggest challenge for the investor has been the cost to fund the property with the interest rate rises and the cost to hold the property with increasing costs in relation to maintenance and ongoing costs, even despite the vacancy rates and the rent. The other issue I think facing some investors has been around some uncertainty. There's talk in some states around rental caps and things like that, and changes to land tax rulings for investors. So I think we've got to be cautious about changing. About 30% of the market is investors and their mum and dads as part of their wealth creation strategy, but they're also providing housing. But credit flows have been down, as you identified. I think we are coming into spring with some higher auction clearance rates, as you showed, and the market activity I think will pick up.
And as you say, the structural issue, the government is looking into it. There is a hearing into how to fix the housing crisis, and I think we'll hear from the government in October about what the solution might be. All right, well, let's go to the property sectors. You're looking at issues and opportunities. Let's start with residential property.
Yeah, look, I think for the investor, the main opportunities are a lot of investors have been managing their cash, holding their cash ready for the right opportunities. We saw a lot of the higher end investor markets, the Sunshine Coast areas around some of the regionals in New South Wales ran away from everybody. They're possibly still a little bit overvalued for the investor. The areas that a lot of investors are finding value might be in what you'd classify as more affordable type areas that have infrastructure projects either on the radar or in the pipeline. They've got the core fundamentals, but your entry point might be $400,000 or $500,000, where you might be in some of the outer suburbs, and they're essentially more affordable. They haven't run away, and there's perceived growth to come, as distinct from some of those higher end markets which have run away from everybody. As I mentioned before, the investor market has been facing a lot of challenges. You touched on it before, housing affordability and some of the programs the government's looking at. I think we might also see some other opportunities for investors where some of the larger institutions are now looking at programs like bought to rent, as distinct from build to rent, where the larger institution might actually buy rental properties and units that mum and dad investors can access and essentially buy and sell within that, creating a different investment opportunity, a different way to access the market that might be more liquid and might increase some investor activity as well. So there's other opportunities out there for investors that are also looking to meet some of the structural challenges that we're facing.
Yeah, do you find that some of those that had bought property as an investor offload them in order to focus on their primary residences, and therefore that opportunity is for someone else? But do you find that people offloading investment properties to focus on their core?
There has been a little bit of that going on. Investor sales as a portion of the market recently, generally it sits at about 25%. In recent times we've seen investor sales over 30% as a portion of stock on the market. What that's indicating is that some investors are struggling to hold their stock, and some investors are looking to offload to essentially retain an owner-occupier property for cash flow reasons.
Yeah, all right, let's move to commercial property, because that's, I feel like when you talk about mom and pop investors, probably that's not the first thing that comes to mind, because commercial property, there's a lot more things probably to think about. Tell me what the key opportunities and issues are there.
Yeah, the biggest issue, and we touched on it before, with the higher end commercial properties has been the valuations of the properties. There's been a lot of revaluing of some of that stock, particularly over the $200 million mark. Flows are down about 50%, as I touched on before. I think the main challenge is there's a structural shift potentially in and around office space. So the market is holding off a little bit to see what happens there. The return to work, the size of the office space required. There's been a lot of rental incentives put in place to try and attract offices, new office space in the city, and there's a lot of the larger institutions repackaging up office space to potentially attract some of the smaller businesses that might be in some of the outer suburbs into those city areas. So that it's been a big challenge, the office and the retail space. I think we touched on it last week. Some of the opportunities they're seeing are more around the warehousing and the logistics, where there has been a supply and demand shortage. But some of the part of the market that has been resilient has been more the private investor in the lower end of the market, where they're seeing opportunities on properties that may not have those valuation issues. They might have good long-term tenancies, and they're finding the credit flows through there are still fairly strong.
Okay, and let's talk about, it's interesting to talk about the work from home, how that's going to change the whole market. So in that sense, the shifts in residential, the shifts in commercial, how would it change the role that property assets play in portfolios? Will it still hold that traditional big core?
Yeah.
I think in Australia it's quite...
Yeah, I mean, property as an asset's been one of the strongest performers over time. If you look historically over a 20-year period into sort of the 2020s, the compounding rate of growth for property year on year is around about 6%, which is a good, strong performing asset. I guess like any asset class, the key is time in the market. So a lot of investors are just holding out at the moment for the market to stabilise. Inflation recently has been outrunning every asset class, which has been a challenge for everyone. The fundamentals of property they are a good, strong asset class. Whilst they may not have the liquidity of the stock market, whilst they might have some other challenges, property also creates leverage for as an asset class, which a lot of other assets don't, in terms of being able to use debt to fund the next purchase and build a portfolio. So I think the fundamentals for the property investor remain there, whether it's a mum and dad or investing through your property trusts or investing through other diversified trusts to access the market. Again, it's time in the market and riding out those downturns to pick up the upside as it comes through.